Welcome, everyone, to the Daily Market Wrap. This is the biggest charts in 30 minutes. Today is Monday, February 9th, 2026. And I just want to thank everyone for joining live. If you find some value from this content, please feel free to like, share, subscribe, share this wherever you think it's valuable. Let me go ahead and jump right in. We're going to take a look at Bitcoin. Now, I want to begin by taking a look at a pattern that I see repeating here on BTC. And that pattern, I want to go ahead and highlight this. Let me grab an arrow. So notice when Bitcoin broke its level of horizontal support last cycle. Let's just zoom in to this period right here. I want to zoom into this period and the ensuing bear market. This is what I want to zoom into. Now, I want to highlight the similarity between this breakdown and what we're seeing here. So, this breakdown testing the 200-week moving average, and this breakdown, which eventually led to a break of the 200-week moving average. Let's go ahead and zoom in a little bit here. So, notice this candle. Let me go ahead and delete this brush. So, this candle, that was the breakdown of the horizontal support. And here, that was the breakdown of the horizontal support. Now, when this horizontal support broke down in May of 2022, it presaged the really the beginning of the end of the bear, like the depths of the bear, where we were carving out a trough, a bear market low, which ended up coming in last cycle at around 15,000, like 15,500 or so. So that, I think we're going to see something similar this cycle. Whenever someone says, oh, this time it's different because of ETFs or because of institutions or because of a crypto-friendly president, crypto-friendly administration, all of those things. Whenever someone says this time is different, makes me think, well, this time it might not actually be any different. And last cycle, Bitcoin actually, extended from its 200-week moving average to the downside by 33%. So if there's an extension below the 200-week moving average this cycle to the downside of 33%, that would bring Bitcoin all the way to 38K. Now, I don't think that we're going to see a drawdown of the same magnitude that we saw last cycle because we didn't get real euphoria on the upside this cycle. I think that a more reasonable target this cycle is something like 20% extended to the downside from the 200-week moving average, which would bring Bitcoin to the high 40s. So something like 46, 48,000. But I'll be a buyer at 50K on BTC. I think that is a good level to start entering long positions on Bitcoin, down at around 50, maybe 49, 48, somewhere around right here. Now, notice the similarity between last cycle and this cycle. Very, very similar pattern. You got the initial move, which this move right here, I'm going to say that is like this move right here, the breakout after the election in late 2024. So I think that move is that move. And then we got the correction, and here's the correction. And notice bounced off of the horizontal support, in both cases. Then we got on the bounce, correction. Here, on the bounce, correction. And then extended to the ultimate high. And here, extended to the ultimate high. Now, let's go ahead and take a look at the start of last bear cycle. So we got that initial push lower, bear market rally. Same thing here, initial push lower, bear market rally. And the bear markets in both cases started on a break of that 50-week. And so after that bear market rally, we got the next leg down in the bear. And that's what we're seeing now. We're seeing that next leg down in the bear. And now that we've broken below this level of horizontal support, I think it's just a matter of time until Bitcoin eventually tests and breaks its 200-week moving average and moves down to, let's call it 50K, down here somewhere. Just like it did last cycle, we got the break of the 200-week moving average right about right here. I think that was in June of 2022. And then Bitcoin just kind of hung out, putting in a flag, and then eventually made its trough a couple months later in November of 2022. So that means that we may not see, an ultimate trough in Bitcoin this cycle until the fall, or maybe a little bit sooner than the fall. But, I've got October marked here with a vertical, this vertical line. So I'm thinking to myself that, maybe Bitcoin by October puts in a trough at around 50K, something like that. So I'm just kind of thinking that Bitcoin does something like this until October timeframe, or until the early or mid fall of this year. So I'm still short. I'm short Bitcoin. I'm short ETH. I'm short Sol. I'm short a whole host of altcoins, and I'm not using any leverage, because you don't need to use any leverage if, like I do, you have a very high level of conviction that Bitcoin goes down to 50K. That's an additional 27.77% on the downside. Now, if Bitcoin moves down to 50 over the next, let's call it 4 months, well, then what do you think ETH is going to do? If we take a look over here at Ethereum, here's that level of resistance. Notice this is what happened last cycle when ETH broke this same exact level of resistance. If you had been holding ETH since, something like March of 2021, you've broken even. You're breaking even now. So, but notice this. Let me go ahead and grab my brush. Last cycle, when this level broke, just like it did just last week, last cycle when this level broke, ETH then moved to the downside over the next, 6 weeks. ETH moved to the downside by an additional nearly 60%, 57%. So I think ETH is going to repeat exactly what it did last cycle and move down and put in a double bottom at the bear market lows from last cycle, which came in at $900 or so. So the exact level is 881. So it wouldn't surprise me if ETH puts in a bottom this bear market at 900, let's say, just a couple of points above the low from last cycle's bear market. So I am short ETH, and very happily so. Now here's the thing. I do expect all of these tokens to bounce. And here's why. Let me bring it back to Bitcoin. And instead of taking a look at BTC USDT, let's just take a look at BTC USD, get all the data. And then what I want to do here is I want to overlay IGV on top of this here. And the reason why I want to overlay IGV, this is the tech software. So it's a software ETF. I'm going to use a new price scale. And what I want to highlight for everyone is just how tightly positively correlated these two assets have been. So if we just go ahead and fit this in a little bit so we can see this, that is a pretty tight positive correlation. So basically, starting in, if I just go ahead and fix it like this, starting in, November of 2021, this correlation has been very positive, very positive. And really for the last couple of years, much more positive, starting back in, let's say, late 2023 or something like that. But this is software. So does Bitcoin trade like gold? No, it doesn't. Does Bitcoin trade like tech or the S&P? No, it doesn't. But Bitcoin seems to, does Bitcoin follow the M2 money supply anymore? No, it simply doesn't. That correlation broke down a year ago. But it seems as though Bitcoin is tracking software pretty closely. And so let's go ahead and remove that drawn object and let's zoom in on Bitcoin to a daily. And this time, let's just take a look at IGV. So IGV is the software ETF, and this has just gotten hammered. And so if we get a bounce out of IGV, that would make sense, right? It's been hammered. It might be time for a little bit of a bounce. If software bounces, then maybe that means more room to the upside out of Bitcoin. But remember, Bitcoin is in a category of its own. It's its own asset class. Just because it's traded with a tight positive correlation to software for the last 2 years does not mean that that correlation needs to continue. That correlation very well could break down. And you know what? I think that Bitcoin probably bounces here, maybe up to resistance at 74 and a half right here. But if IGV really gets squeezed higher, then maybe Bitcoin's able to bounce a little bit above 74 and a half. Remember, I'm still short, but I'm using no leverage. And I don't have my full position size on the short side right now. So even if Bitcoin is able to bounce by 15% up to 80K, that would mean software, IGV, is probably able to bounce up here and maybe fill that gap right around here. So that would be a bounce in IGV of, a similar 15% or so. So that seems to make sense to me that, maybe IGV bounces, fills this gap, and then gives it back, while Bitcoin bounces up to resistance here at 80K and then starts to correct again. But Bitcoin's trading very weak. So, maybe there's a bounce, maybe not. Either way, I'm going to stay short. Even if there's a bounce, I'll just, if Bitcoin gets up to 80, I will definitely use those higher prices to add significantly to my shorts. Okay, we've taken a look at Bitcoin. We've taken a look at Ethereum. Let's take a look at Solana. So this is one of my favorite shorts, this bear cycle, Solana. And the reason for that is simple. I don't think that there's any decent level of support until Solana gets to 30, 33, 33.77, something like that. I think that this is support right there. I think this is support for Sol. And if this is support for Sol, well, then there's still an additional like 60% left, like meat on the bone left if you're short on the downside in Sol from where it's trading now at 87 to all the way down at 33. So that's 60%. You don't need to use leverage. I'm not using any leverage. There's no need to use leverage here. All it's going to do is mess up your emotional game. So I'm just thinking to myself, okay, well, where's the support here for Sol? Now that it's broken down below 95, I don't think that there's any solid support until 33. And so where Solana found support is just kind of in no man's land, NML. So you don't want to get caught in no man's land levered long, because I bet this thing just goes down in a hurry, especially if Bitcoin starts to make another move to the downside. If Bitcoin makes another move to the downside, then Solana will be at 33 quick, fast. So I'm short Sol. I see resistance at 95 or 96, this level here. That is resistance on the upside. Support as of right now is the low that was put in last week. Let's call it at 68 or so. So support at 68, resistance at 95, and a break above resistance. And then we might talk about 118, but a break down below support. And I think we've got to be talking about 30. So I am short Sol, and I expect there to be some more downside. Okay, let's take a look at some higher volatility altcoins like Tau. Now, Tau is a really interesting and I think useful protocol with not much adoption yet, but I think that it could see some real adoption at some point in the future. The problem with the chart is the breakdown at 170. So notice twice, 170 held the support, and then it broke. And now that it's broken, I don't see any support until we get to, this high from 2023 at 92. I think that is the new level of support now that Tau has broken down. And if we zoom in here a little bit, you can just see that level of resistance at 170 right there. It was support, now resistance at 170. And the level of it was support there. Now it's resistance at 170. And the level of support doesn't come in until 93. So $93 on the downside is the level of support in Tau. And the level of resistance above is 170. Now, a break above 170, and Tau could definitely move back up to 207. So a break up and resistance comes in then at 207, a break down and support comes in at 93. So I am short Tau, and this one has been working pretty well. Let's take a look at, you know what? I really like the protocol. I think it's a very useful protocol. Excellent idea. It just needs traction and user growth. Let's take a look at Link. Here's Link. Now, the thing about Chainlink is extremely valuable protocol technology, but you can pay for it. Can't you pay for this protocol in dollars? Like, why do you need the Link token? What's the real utility for the Link token? Does Chainlink force anyone who wants to use their oracles to first buy the Link token? I don't know if they do, but regardless of whether they do or not, this is still a pretty clearly defined head and shoulders pattern. And with the breakdown below that trend line support, you really got to start thinking that Link heads down to $5. Now that Link has, you see this level of resistance from the bear market, these were highs during the last bear market, 1, 2, 3, and on the fourth test, there was the breakout there. So that's a solid level of support, but it was broken. It was broken just a couple of weeks ago. And so now that that level of support from the old bear market, from the last bear market, has broken, it becomes resistance. So resistance comes in at $9.50. But the support in this zone, in this channel, really doesn't come in until maybe like the bottom third of the channel at $6.50 right here. But I think better support for Link is at $5 or so. So I am short Link. And, could Link move down to $5 over the next 6, 8, 12 weeks? Sure, definitely can. But if that doesn't hold, you got a lot of trading activity from back here in 2019, 2020, and that's all the way down to $1.50. So it's time for Link to either rally back above resistance at 950 or start its descent down to $5. I'm betting on the latter. I think that Link moves down to $5 over the next couple of weeks, couple of months here. Let's take a look at SUI, SUI. So SUI is a smart contract protocol. I really like operating on SUI. It's very fast, very cheap. However, also the validator set is very centralized because you need like some outrageous amount of SUI to become a validator. So it's really not decentralized. And hey, I hope that this protocol succeeds. I hope that they're able to build real DeFi protocols on top of the SUI chain. But taking a look just at the technical analysis here, I would love an opportunity to buy SUI at 40 cents. And I think over the next couple of months, I'll probably get that opportunity. So I'm looking at the chart here, and now that SUI has convincingly broken down below $1.33, which was basically the last level of support, I don't think that there's support until SUI gets down to its old lows from the end of last bear cycle. Now SUI has not been through a full cycle yet, and this is a high FDV, low float protocol, which just means that FDV is fully diluted valuation. Float is the number of tokens that are available. So there's a lot of inflation still in this protocol. There's a lot of tokens that get unlocked like every month. You can take a look at the unlock schedule. For SUI, there are plenty of sites that will tell you about the unlock schedule, but every single month there's tokens unlocking. There's a lot of float that needs to be unlocked. That makes this token very inflationary, and it's having a hard time really attracting DeFi TVL, especially when you compare it with ETH mainnet or really many, Arbitrum, a layer 2 chain, even Arbitrum, I think more DeFi TVL. So I'm not quite sure what the use case is if you can just use an Ethereum layer 2 for SUI. I'm sure that there is one. I just don't really know exactly what it is. So maybe it's that Move programming language. They use a different programming language here on SUI than Ethereum does. Ethereum uses Solidity and Rust. So I'm just thinking to myself that looking at the chart, just purely looking at the chart, if SUI gets down below 78 cents, let me just mark that real quick. So that's basically the low from the last crash. So if SUI gets down below that, I think it's a straight shot down to 40 cents or so, 37, 40 cents, something like that. And depending on how quickly SUI gets down there, and I expect it to get down there, depending on how quickly it gets down there, it may actually move even lower. So if SUI gets down to 40 cents, but it's April, well, it depends on where Bitcoin is. If Bitcoin is still above like 60K or 55K, then maybe those are the lows, getting close to the lows anyway. But I'll start buying SUI at 40 cents. I'm short and I'm not using any leverage. So, an additional 60% down to 40 cents, I'll take it. I'll take it all day. So short SUI. Here's XMR. Now, Monero is actually starting to rally. This is, one of the alts that's actually starting to rally a little bit here. I'm short Monero. And, I expect it to move up to its 200-day moving average at 363, something like that. So another, let's see here, how many percentage points? Another 8 percentage points on the upside for Monero. Now, there's a clear use case for this. This is a privacy token. So clear use case here. And if Monero is able to break above 364, then we would be talking about, the underside of this level of what is now resistance. It was support. It is now resistance. So that would be, from the current price, an additional something like 25, 28% to the upside, depending on how quickly it gets up there, if it gets up there. So this is a pretty clear triangle pattern. Let me go ahead and just highlight this. There's the horizontal and there's the support. So pretty clear triangle, and I expect this to break up. So let's see if Monero is able to break up and test its 200-day moving average at 364. Now, just like every other digital asset, I expect this to break down. I don't expect, even if Monero is able to break out above its 200-day moving average, I think it still breaks down. So the level of support that I've got drawn in for Monero, I can just throw down a horizontal here real quick, right about right there. So that would be, the January 2023 highs at around 193 for XMR. And so that would be a decline, just a little bit less than many of the other alts, something like 45% to the downside. Now, if Monero breaks 188, then, we could talk about 110. So that would be the bottom of this box that I've drawn in here. This would be like a buy zone for me on XMR, on Monero. However, I am short. I am short XMR, no leverage, with no leverage. Let's take a look at XRP. Here's XRP. Now, you talk about meme coins. That's what this is. There's no use case for this. It's the gas token for the XRP ledger, which no one uses and no one builds on. And, it's just super inflationary. The Ripple team seems to just dump this thing to fund their operations, which is pretty gross, if you ask me. So I think that XRP goes down to 60 cents. And let me just go ahead and highlight that. Now, this is one token I will not be buying, because I don't think there's a use case for it. And I don't know why it still exists. Like, I'm trying to figure out, how is it that this still exists? I don't know. It must just be grift. But, 60 cents or maybe 70 cents is the first level of support for XRP on the downside after it ends up breaking below. Let me go ahead and move that lower. So those crash lows on XRP. Now, XRP had one of the biggest bounces during, after the crash, the day after the crash. XRP was up at one point nearly 30%. It closed the session plus 21%, but it got a really strong bounce. No continuation yet, though. We're not getting any continuation yet. So resistance for XRP would come in at the horizontal at $1.77. That is the level of resistance to watch. Level of support on the downside, the first one comes in at $1.11. So that's basically that's the crash lows from a couple days ago in XRP. If it breaks $1.11, I think it goes to 75 cents and then probably lower. But yeah, I'm short XRP and Schadenfreude with this one because it's just, I don't see the reason for existing for this project at all. Here's SPX. You talk about another meme coin like XRP. This is a real meme coin. XRP is a fake meme coin. This is an actual meme coin. And this is not the all-time low for SPX 6900. I think there's a lot more data here, and it goes back like maybe another year or so, maybe even longer than that. So this is not the all-time low for SPX 6900, but I think that this is going to go to zero. You talk about like use cases and utility. There's none for this. This is pure meme. The only utility for this is you buy it because you think you can sell it tomorrow for more. That's nonsense. So I think this probably ends up going to zero over the next 12 months or so. Maybe even faster than that. Maybe it gets very, very close to zero over the next 4 months. That wouldn't surprise me at all. So, yep, I'm short SPX 6900, and if it's able to break down below the lows it put in a couple days ago at like 21 cents, I think the floodgates open and this thing could just crash. It could be a straight shot, single candle down to 1 penny. Now, let's take a look at Doge. Here's Doge, another meme. And look, I like Doge as much as the next person for the meme value, but like, how many billions of dollars does this have in market cap? And for what exactly? I don't think that there's any use case for this at all. And, look, this is different than all the other memes because this is actually a layer one. So you could potentially, I guess, build something on this. That would be, Elon Musk likes to say that the most likely outcome is the most ironic outcome. And so, for someone brilliant to come along and build some protocol on the Doge layer one, and that becomes, the money that everyone in the world uses, that would be a pretty ironic outcome. But until then, there's no use case for this. This is a pure meme, and I think it should go to zero because I don't want the nonsense in crypto anymore. I want the real utility in crypto. I want real projects that drive real revenue with real utility and a real use case used in real life by real people. And, maybe those things could be true for Doge at some point, but, I just don't see that being true now. And if Bitcoin moves to 50K, I think Doge probably tests its bear market lows from last cycle, which came in at 4 cents, maybe 5 cents or so. So that would be about 50% to the downside left out of Doge, something like that. And if those lows don't hold, well, then there's plenty more room to the downside from there. So I think it's time for the old, useless scam tokens to die. And that means Doge has to go to zero. Let's take a look at Arbitrum. So this is another token that really I don't see what's the purpose. Like, why do these layer twos need a token? It's not like this is used as gas. You need an obscene amount for it to be useful if you wanted to vote on governance. So I just don't understand its reason for existing. However, the thing about ARB is that it's a very, very useful chain. There's a lot of great DeFi products on Arbitrum, native to Arbitrum. And so I could see this thing making a low at like a penny or so, maybe 2 cents, but then pumping in a big way because this is a bullish pattern. This is a descending wedge. This is a bullish price action pattern. So a breakout, first test the lows down here at 2 cents. And then that would be the trend line lows here. So test the lows, and that would be a massive, massive decline. We're talking about like 90% left on the downside. So again, I'm short this, but with no leverage. So I'm thinking maybe a test of 2 cents and then a big pump because this is a bullish pattern. So we get the test of the lows, break out above resistance, and then we'll see what happens. So I would actually be a buyer of this thing at a penny or maybe 2 cents, just to see, just to see what happens if it's able to pump. I don't think the Arbitrum chain is going anywhere. So let's take a look down the list here. We've got 1 minute left. Let's just take a look at the S&P and the NASDAQ real quick, and maybe gold. So the S&P here, these are ES futures. S&P, big breakdown below support. Let me remove the 200 and throw the 100 on there. So big breakdown below trendline support and the 100-day moving average, but it basically held the 100-day late last week. And this candlestick, this is a big bullish engulfing candle. Notice this candlestick from last Friday engulfs, and it engulfs all of the trading activity from the previous 2 sessions, the bodies of those candles. So big bullish engulfing. And so a bullish engulfing is just a short-term continuation. So that tells me that maybe there's enough oomph for the S&P to get above resistance, get into this rarefied air, maybe print a fresh all-time high. But we shall see. It's been a while just moving slowly up and to the right out of the S&P. Here's the Nasdaq. Now the Nasdaq put in a similar pattern, as to what it put in last, the last time it actually had a decent correction here into those tariff tantrum lows. But the Nasdaq here is getting rejected at resistance at its 100-day moving average, unlike the S&P. So maybe if this is able to break to the upside, then that might be reason for software to bounce a little bit, and Bitcoin might bounce also. But if this breaks down, well, then we're going to see that next leg lower out of Bitcoin. So I'll be watching volatility futures quite closely. This is just VX vol futures for the S&P, and as of right now, volatility has just gotten monkey hammered all the way back down to its respective 100-day moving average, but sitting above trendline support. So we'll see what happens over the rest of this week. I want to thank everyone for joining live. It's always a pleasure to be able to run through this technical analysis with you guys. And if you want to try trading, I built a really cool tool that you should take a look at. I'll go ahead and share that on my YouTube channel at some point this week. It's basically like a trader's journal for anyone who wants to learn how to trade systematically. So appreciate everyone for joining live. Like, share, and subscribe if you found some value from this content. And I will see you guys all tomorrow, same time, same place. Have a good one.